All right, traders, welcome back to this week's session of market analysis and kind of trading recaps, if you want to call it that. Just wanted to post a little bit more about some of the price action we saw this week and opportunities that were there. Obviously, I already broke down the trade that I took pretty much pre CPI. And then I was quite interested to kind of just dive into a little bit of the sort of technicals, more say from an analysis perspective, and then obviously there was a couple of trading entries thereafter. So let's dive into a couple of that and just, yeah, pretty much see how I can kind of either help you in your trading journey and more specifically just showing a little bit of analysis and what how I kind of look at the markets, right? So I did explain that there was this higher time frame hourly sort of bearish chain that I was quite interested in seeing price action hold in. We obviously then did break above the structure points over here. So for example, this was an H1 area that we broke above quite nicely, and you can pretty much see that price, formed this sort of bigger area of interest, if you want to call it that. And we pretty much were then stuck between this low and this high over here. So if I just mark this out quickly with a PND tool, there we go. Right, so if you have a look over here, you can pretty much see how price was kind of trading in and around these areas. We then obviously tapped into this area. This was the short that I was interested in, or that I took. So this was pre-CPI, remember, kind of got out pretty much before this move. You can see we then just dipped our toes into this area of interest over here. All right, if I just had to maybe refine that a bit more. And I did mention this kind of in my analysis. I was curious to see how these two areas would be holding. Obviously, we're trapped a bit on both sides. And you can obviously see we pushed off quite nicely thereafter, right? Then we find ourselves pretty much trading now back in this area of interest sitting above. So hence, when it comes to say a higher time frame bias, I like to use these more as a directional sort of, point of interest, if you want to call it that, rather than pegging, say, my bias to say, shorts or longs at any given point in time. You can obviously see here, we then broke above this area over here, which is pretty much our, excuse me, it was pretty much our high pre-CPI. We then pushed through there quite convincingly, came back and retested that. You can also see here we had this sort of BPR area, right? Or in this instance, this would be actually our inversion. And we came and pretty much retested this, and we continued to push to the upside, right? Now, I want to show you pretty much from an analysis perspective how you can basically trade both counter and pro trade at any given point in time. So for me, yeah, sure, these areas I could see were holding, and coming into say Thursday's PA, 9 times out of 10, when you see these kind of moves to the upside, you're most likely either going to kind of run, say, an internal low, so say this one here, and then you're going to pretty much get some sort of run in liquidity and then, push higher, right? But that's not to say that you can't trade, say, counter trend. I found that a lot of my setups actually are very much counter trend based, kind of going against the grain, going against the flow. And if you have a look over here, this is actually where I was quite interested in taking some short positions, mainly because I was of the opinion that we would come and retest this area and push higher. And, sometimes that being said, it doesn't necessarily mean you can't be open to taking any potential opportunities when price kind of comes into these areas, right? So if we had to drop down onto the M15, which I am obviously on right now, you can pretty much see how that once price price had made this move, which was basically post CPI now. Okay, so if you had to kind of refine this maybe a bit more, I would say something down like that. you kind of understand now that based on this information, so let's say, for example, I just had to go back to this 1 hour inversion that was sitting over here, right? You can pretty much see that this would have been, say, your refined area of interest within this main leg, if you want to call it that. And for me, this was quite an interesting perspective on things, or just in terms of an analysis point of view, how I was kind of trying to potentially take these, well, I did in the end, take these counter trend sort of shorts back into these areas where I kind of knew, we had Asia low sitting over here. We had this internal liquidity point over here, and then also if you had to kind of map out your PND tool, we were most likely going to try and tap into some sort of discounted range, and then potentially push higher, right? Something like that. So for me, very similar to the trade that I took pre-CPI, we saw this run of liquidity over here. Buy side liquidity sitting at around 1.4297. We then obviously had Asia's range high taken as well, and that was pretty much pre-London. So if you have a look over here, we had that low taken over here. We had swept this high over here. And, if this was maybe a little bit more further down, say during London session, I think this was pre-London Open. This is pretty much an ideal sort of entry model for me. I would have then been very keen to kind of take an entry model based like this. Stops maybe just above the high, potentially targeting back down into Asia low sitting over here. And then obviously you can see from a timing perspective, we were just outside of that London kill zone. So for me, I was quite keen to see how price would trade going into London. And if you have a look over here, we moved quite swiftly, which is quite nice. There was a lot of aggression in this move. Sometimes when you see these moves, these are quite interesting because yes, price might actually just continue to drop to the downside and not really give you an entry. But that being said, 9 times out of 10, you do sort of get those pullbacks. And for me, which is also what I shared in both my analysis and my trade ideas on the day, I was quite keen to see price action pop back into this area over here. Okay. And then see some sort of continuation to the downside, knowing that this is my invalidation point over here. And for the most part, I wasn't necessarily too concerned if price kind of shot through here. So let's say, for example, price did actually trade back into this area. Okay. And we just saw price continue to push higher. It wouldn't have invalidated my trade idea, but it definitely would have made me say a bit more cautious because, we are obviously pro-trend bullish on the intraday. So for me, I was quite interested to see if price would come back, hold in this area, okay, and then continue to the downside. So even just marking out, say, the premium and discount leg, let's say that this is my low, which we then obviously printed in London. Price then obviously comes back into these areas right over here. So let's say, for example, you're looking at this inversion over here, which we broke above or broke below, sorry. You can see that price pretty much now has the option to kind of come into these areas, and we could potentially look for some short continuation out of these points, right? So for me, even just using something as simple as this, so this would have been my sort of leg to the downside, okay? I would have then maybe, or in this instance, I would have I did use my Fibonacci tool, just using the body to body to kind of get a little bit more of a clearer sort of entry model. So marking out this as my 62 or my optimal trading entry, right? So from this high over here to this low over here, I was then quite curious to see how price would react out of this area, considering there were a couple of confluences that were also in alignment with this area, right? So for me, I was quite happy to take entries off here as my sort of first point of interest, an optimal trade idea, and looking to kind of trade back down into Asia low, sitting at around 1.3900. And if you have a look over here, I'm happy to take sort of a scaled risk entry on this, knowing that maybe we potentially could take this high during New York, print a similar entry model, and then continue to the downside, right? So that bearing in mind, happy to take my first sort of entry over here like this. And obviously looking for this low to break over here before adjusting risk, right? We then obviously got quite a nice move out of it. We then actually formed, I quite like it when price does this. We then formed this liquidity to actually continue to run to the downside. So when price actually builds up like this, I actually prefer it, to be honest, because it gives me a bit more sort of confidence that price has something to kind of attack to the downside. And in this scenario, you can see here that that level, that entry model out of that 62 level, which was on the OTE, stopped just above this high. Let's say you even just had a stop at around 13 pips, targeting, say, a 2-to-1, or at least even just partialing majority at that 2-to-1 level and then trading back into Asia's low. You can pretty much see then we had a very, very clean move out of that area. Managed to bang some good R on this position. Actually was one of my bigger trades of recent. And yeah, I think it's quite a nice sort of educational point on how you can actually still take entry models, even though maybe your entry model came, say, pre-London in this instance. If that's a rule that you have, maybe you want to take entries pre-London, maybe you don't. My data and my statistics show me that it is better to wait for London Open. And maybe that is something you do too. So in this instance here, really clean entry in the end. If you were targeting this Asia low, pretty much a 3-to-1. I try take majority of my position off the table at 3-to-1. And we also had that higher time frame bias that price was going to potentially discount back into this inversion over here, or just even marking out the high to the low over here, for example. You would have been able to see that. Let me just change this quick. You would have been able to see that price was going to probably come into this area, right, and then react out of it, right? So counter trend setup for me, lovely 2-to-1 in the end. If we have a look at how price then rolls over, we just missed this inversion level, but we tap into this 50% level on the discount tool quite perfectly. And a lot of guys would have then obviously potentially looked to take this trade back to the upside. There's nothing wrong with that. So in this instance, right, you had Asia low as your sort of first confluence. You had price discounted perfectly. If you were looking at, say, this demand area over here, that would have been potentially something you would have kept in mind. Okay. And then obviously you would have had this valid sweep and liquidity over here. You would have then had this valid break over here, which was obviously quite a strong move, and you could have then taken this trade back to the upside. Right? Nothing wrong with taking this trade either. For me, I'd already banked my position for the day. So let's say, for example, you're trading a fixed 2-to-1 in this instance. In this instance, you actually would have got stopped. But for the most part, you probably could have partialed out some decent R even at this high over here. And then obviously, price ended up moving to the upside thereafter. So for me, this wasn't necessarily a trade idea. I actually ended up taking, just showing you from an educational perspective, how you could have maybe taken that into consideration. I do also know there were some news events that came out later that day. So maybe you were potentially just wanting to take this trade before, say, New York Open. And in this instance, that was what basically happened. So that was Thursday's trade idea. what I executed quite confidently in. I like those sort of setups. I like those positions. And then on Friday we had something similar, and we saw price action pretty much pop back into these highs. So if I go onto the hourly time frame, here you can see I'm just using these areas more as a potential sort of reversal point. I'm not really giving myself, say, okay, cool, I'm married to this bias. This is where price has to reverse from. Price does not have to do that. So you can see in this instance here, price was actually quite nice, nicely tapped into this sort of high time frame supply area. We ran this sort of buy side liquidity sitting at around 104,679. And if I drop then onto the 15-minute time frame using 2 degrees as tool, I then obviously saw this opportunity where we had price action pretty much come into this manipulation area, almost a picture perfect AMD model, right? You can have a look here. I'll just remove this. I really love trading these positions and sort of entry model ideas. We had that high time frame buy side liquidity sitting over here, run, tap into say a high time frame POI, and then we had our stock standard M15 entry model, right? Out of this ADR tool, out of this manipulation level, perfect for me, to be honest. You can see we were popping our head like this, and I was basically looking for price to kind of do something like that. I had some sell stops actually sitting here, price just below, trying to target this immediate low down here. One thing in this instance is something you need to maybe keep in the back of your mind. We had already taken Asia low, early sort of London trading session. Pretty much actually even pre-Frankfurt. So for me, I was a bit wary that maybe price was not going to reach back down here, just because we already had, one of the key sort of confluences taken. So I was quite aggressive in the way in which I managed risk on this position, because I know sometimes price might not necessarily get down here, and we might just be making, say, a new low over here, right? If I had to tap this into the discount area, poof, something like that. Okay. So for me personally, I was quite keen to see how price would react out of this area. We then eventually got the entry. We then got this further confirmation sort of break over here. And then obviously price got to almost about 1.2 R or so. So for me, I decided, you know what, coming into New York trading session, there was some red folder news later that day. I think it was core retail sales. So I just decided, for me right now, it's probably better to roll break even. So I cut my position pretty much to break even here. Also considering that this low was taken here already, we basically are just done this sort of discount move over here. And, if we had to really try and map this out, say from a Fibonacci perspective or from an OTE, you can see here that we basically tapped into this area pretty perfect, to be honest. And then we continued to push to the upside. So in the end, great move to kind of go break even. Obviously, heavy counter trend in my sort of in the way I trade and what I was potentially looking for. So in this instance, yes, sure, counter trend trade, manage risk effectively. Just be aware that you are going against the grain. And, maybe this is something that you would have been interested in, from a continuation play perspective, trying to maybe take price into this distribution level, which we then obviously mitigated quite well. And, potentially price and just obviously still going into Friday close. So that's basically a recap of what I took and what I traded this week on Euro Dollar. I hope you guys enjoyed the session and you can learn something from it. And yeah, I'll catch you guys on the next one.